Hey folks, Shawn Plummer over at the Annuity Expert. In today's video, we're going to answer the question, how much of annuities can I have in my portfolio? The answer to that question is you can have as many annuities as you want. Most insurance companies want to see a couple of things to purchase an annuity through them. Number one, they want to make sure you have at least $87,000 liquid. That's not a house. That's not your car. That's like, hey, if an emergency happens, you can get to at least $87,000. And that number will typically increase the older you get. So keep that in mind. They also don't want your total liquid net worth as a household. So husband, wife, wife combined. Okay, to have more than 60% of your liquid net worth. Okay, so for example, let's just say you and your spouse has $1 million in total liquid net worth. They don't want to see more than $600,000 of that $1 million tied up in annuities. It's to protect you. It's to protect them. They don't want to get sued. They don't want you as the consumer being stuck in a situation. They want to make sure that, I use the term warm and fuzzy about you buying the annuity, and they want to feel warm and fuzzy about selling you that annuity. It's really a two-way street. It's not a buyer's market. It's not a seller's market. It is a legal contract between an entity and an individual. And so they just want to make sure you're in a good financial situation when buying an annuity. And every insurance company has what's called a Suitability Team. And this is a team that analyzes the applications that come in, every application that comes in, and they determine whether you have enough liquid assets, if you're replacing an old annuity with a new annuity, that you're in a better situation going into this new annuity than you were with the previous annuity. They'll look at how long you've been in that previous annuity. Sometimes they'll ask for bank statements to make sure that what you're saying on the application is true, and that you have enough liquid assets. They may even call out to you. But the answer to your question, you can have as many annuities as you want. They just want to see at least $87,000 in liquid assets. And they want to see that 60% of your total net worth, liquid total net worth, it is no more than 60% is tied up in annuities. I've seen folks get annuities up to, I think my largest case was around $4.5 million. And they spread that out over several annuity companies. I like to recommend that when somebody's spending a lot of money on an annuity, that they split it up amongst multiple carriers that meet the State Guaranty Association threshold. And if you don't know, the State Guaranty Association is the insurance company's version of the FDIC. So if the insurance company goes out of business, the State Guaranty Association will meet the terms and conditions that you bought the annuity on. And it's usually anywhere from $250,000 to $300,000. So if you had $1 million that you were going to use to buy an annuity, I would recommend splitting that up over 3 to 4 insurance companies just to stay under that threshold. So I hope that answered your question. We'll catch you on the next video. Like, subscribe, leave a comment, and I'll answer that comment to you. Just be as specific as possible. And we'll catch you on the next video. See ya.